Hey, this is Peter from Weekly Options Advisory and ShadowTrader.net, and today I'm going to show you a day trade that I took in the NQs today that worked out really well, but more importantly, why it worked out. So the trade actually started before the market actually opened. I didn't enter it before the market opened, but this is the report that I put out every single morning at 9 a.m. Eastern, and you'll notice that one of the key things I talked about here, starting from the pre-market, was the fact that the NQ was coming close to an important resistance point. And in my morning video, I talked about that a lot. And you can see also here in the scenarios that I lay out, I mentioned this again, saying that it's a bullish stance until the NQ hits the downtrend line shown in the video. And if you were watching the market today, you know that that's exactly what happened, right? It was bullish up until we hit said downtrend line. And what that did is it set up this trade right here, which was a short on the NQ for about, what does that work out to? Like 51 points, I guess? Yeah, probably about plus 52 points, probably. And it really was a situation where the planets all really lined up together in terms of the technicals and also even on the market profile. So the first thing is, this is the cash market, which by the way has the same resistance as the futures market and was right into the downtrend line. I'm showing it to you on the cash, but I know I said it in the NQ in the report. But notice that the NASDAQ has been rallying for a number of days here and went straight into there, right? And at the same time as that happened, on the market profile, we've been seeing over the last few sessions, there's been all kinds of signs here. And this is really what I talked about a lot in the morning report, talking about how there were all kinds of signs that a liquidation break of some sort was imminent. And why do I say that a break was imminent? Well, not only did we come right up to support, so it was obvious that that would be a short there, at least, at least for a big day trade. We may go lower, we'll see. But look at what's been happening in the profile over the last couple sessions. It's been multiple back-to-back unfilled gaps. So this tells us that momentum players are really in control. Here's an unfilled gap. Here's another unfilled gap, right? So you've got back-to-back unfilled gaps. And then on top of that, notice what happened on Thursday. This was and mind you, I'm showing you this in the ES, even though the short was in the NQ, but you know these two markets are so connected that it doesn't matter. I mean, I generally study the market profile using the ES, but I'll trade, either. And I'm not really a full-time futures trader. I just, when I see a good opportunity, I'll take it. And this just happened to be, to me, was a good opportunity. But in that vein, notice that the POC on Thursday, which is the fairest price to do business, where most time was spent, it didn't migrate higher with the market, right? We closed here at the red boxes, and yet the fair price stayed down there. And this tells me that a lot of the activity moving up is really just momentum based, and that means that you don't have a lot of longer term money in the market. You just have a lot of momentum traders pushing the market higher as it gets closer and closer, and those people have bad location. Another thing that kind of tipped me off to the short was the fact that in the ES, notice that you made a poor high. And again, I kind of defer to the ES in the profile because the NQ does not profile as well as the ES because there's just so many more ticks, and you really have to kind of crunch it down sometimes into like putting, say, 4 ticks into one price level. So I generally will just watch the ES, but like I said, because these are so connected, it doesn't really matter. And notice that there was like this lack of material excess at the high, which tells you what? That they're essentially crowding the plate, right? They didn't get their excess high that got them paid. They're all kind of crowding the plate up in here. You can see the profile gets wide, kind of anomalous where it's all just like flat on one side. This tells you that that people are long up at the top with poor location, and that generally leads to a liquidation break. And so for me, the short on the NQ was up at was right up in here in this consolidation, right up in here as we were consolidating up in here. And then the liquidation break occurred, and like I said, about 50 points, it was about 255-ish, and then about 50 points lower down into here. And then why am I no longer short it? Well, very simply because notice what just happened here and I'll just make this a little bit bigger. I'll move it down for you. Just using a simple 5-minute chart, okay, my exit was right in here. I'm just trying to get a drawing tool for you. Right in here, 18.2 average or so, right? Because I'm short from 55-ish, but why? Because look what happened on the 8 EMA. A weaker market would ride this all the way down like this. Just keep it simple. It's a 5-minute 8 EMA. And yet what happens, and what made me kind of cover the rest of the short, is the fact that instead of rejecting at that 8 EMA, this happened. And when I saw that multiple bars were setting up back and forth, boom, 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 like 2, 3, 4 multiple bars at the 8, that's not what the market should be doing on if the short is going to keep going into the afternoon. And what does that do? It leads to this inverted head and shoulders, and you can see prices higher. So I don't know where price is going to be tomorrow, but for me it was an exit. To me it was an exit there around that area to bail because of the signals that I saw. But the most important, I think, takeaway from the video that I want you to really understand is how sometimes for a day trade, all sorts of factors come together on the longer term charts that really set it up and in the profile. And the market is giving you very, very strong signals that you've got an area where you have what we call an asymmetric opportunity, where you can have relatively low risk, but a bigger reward could play out. Hey, this is Peter from ShadowTrader.net, and I just wanted to thank you for watching this video. If you enjoyed this content, please hit the like and subscribe buttons. And if you'd like to trade live with me every day in my weekly options advisory, then check out the link in the description below. I wish you good trading, and I'll see you in the room.